Welcome to readtheticker.com. At the moment, the markets are in debate. The debate is, do we have a top pattern forming? That is a distribution pattern forming. A distribution pattern is a matter of process and not an event, unlike 1987 crash. Or do we have a reaccumulation pattern going on? That's basically a run-up and a sideways pattern and a breakout to higher highs. So we're looking for clues on each swing of up and down, how much volume is favouring either side. In the blog, wait a minute, where are we? In the blog, this post here, we see an upper channel warning for the Dow Jones on a weekly chart. In this post here, we show off how controlled distribution is going on at higher prices. That is, prices are elevated and folks are selling. And in this post here, we show that things happen in threes and we're up for a big cycle top on a sequence of 7 years. So there is definitely some distribution going on, and it was ripe for either a change or continuation in the market. But right now we do see some distribution going on. The question is what type is it? Here we have the Morgan Stanley Cyclical Index. It is made up of consumer discretionary, industrials, and materials. There's only one bank in it, and I think 2 telecom stocks. So it's very related to the American consumer, and it is a good representation of how strong the market is. So at the moment, we all know that the market's been on an elevated run for about the last 13 months, but the law of pot odds is beginning to run out. Just like if you're rolling a 7 at the craps table, and eventually it's going to stop. How buy the dip has worked here: 1, 2, 3, 4, 5, 6, 7, 8, and the 9th time is up for grabs right now. So there's 9 dips where it's bounced off a gain angle of some note that has actually managed to go higher. This line here where my cursor is the 1-to-1, and down here is the 2-to-1. That's 1 unit at a time to 1 unit of price. There's some interesting characteristics of this last rally here. Now here we have, between this point here and that point there, we had price move away from the gain angle quite aggressively, which is very similar to this price action here in this last top. Price moved away quite aggressively. Then it sort of had a little bit of an ABC down, a little bit of a down smash, hard down to the gain angle, which we sort of had here as well, which is quite interesting. But it returned to the mean of that gain angle here. It did so here. But here we had an ABC up, ABC, but it didn't take out a new high. Here we've had an ugly ABC, sort of, there's a strong A, a bit of a B, a bit of a C, and it's back down to the gain angle. Whether it does another little burst up, I'm just, at the moment, we have to ask ourselves, a challenge to the 1-to-1 gain angle for the 9th time. So if you know, just the law of pot odds, eventually statistics does say is your luck's going to change. So what actually happened here is that selling, people realised the momentum game was over, and selling was actually very aggressive in that block there. We had a hopeful bounce, which really was just a little bounce up to sell into. So point 1, and when Morgan Stanley Cyclical Index breaks this 1-to-1 gain angle, it is a significant blow for the momentum play. There's a situation where the music has stopped and there's only a few chairs to grab. So the selling will accelerate, I believe, down to this, at least this support line, before we get a bounce, and then we see what happens after that. In the ratio below, I've got XLV, XLY, which is consumer discretionary divided by staples. And consumer discretionary, as you can see, the momentum is pretty much a whole bunch of momentum stocks, has enjoyed profit taking. Now, I'm a great fan of Charles Biederman's website called Trims Tabs, and he's saying that that is a result of raising cash for taxation in the first couple of weeks of April. And after this last 13 months, there's lots of greens on people's screen. So turning green into profits, into cash, sorry, for tax time is obviously a requirement. The question is if coming next week, is the selling for tax over, or is there something more serious going on? But like anybody who sees a chart like that, whereby the dip has worked so many times, I mean, quite frankly, you double your money or triple your money quite easily if you knew it was going to happen. Another interesting thing about this chart, here's the low of 2009. I think it's this indicator here. Do some box equal movement. Oops, try another one. Right, let's try and get this right. Here we go. So we have $300 to $750. Well, not too much. Yeah, that's better. 300 to 700, 700 to 1100. As you can sort of see, the equal movement between the lower level, this level here, and we're sort of running out of steam. It's an equal movement of three boxes for about $400. So I would say this is very extended for the time frame, and we are running out of time. As I stated before, Morgan Stanley Cyclical Index has three components. If you take those components, the consumer discretionary stocks, this is the index up here, Morgan Stanley Cyclical Index. You can take the consumer component and you just add it all together on an even index, not weighted, just pure add them together. You can see the momentum has run out. And what we have here, we had a bit of a spring here, an up thrust here, which failed dramatically. So that is that. From that sell down there is pretty bearish. We may get another go, but we have to watch it this week. So consumer discretionary stocks have pretty much lost momentum for the last several months. Industrial stocks have also started to slow down. We had an up thrust here and a dramatic fail. And material stocks are only just started to slow. But as you should note, the consumer discretionary stocks are sending a warning sign that they may have reached the capacity on the upside. We'll have to wait and see what goes on here, but just keep an eye on those. The swing chart. We've got a selection. There's a selection of the cyclical stocks. Here the consumer discretionaries, the industrials, and the materials. And all the purple you see on the right hand side here is showing that the implied volatility is screaming higher. So people are loading up on their protection, knowing that these stocks are extended. So I suggest you watch the Morgan Stanley Cyclical Index. If you remember, watch it if it breaks the one-to-one gain angle. I believe we'll get a few fireworks as the momentum play and the end of the musical chairs and people looking for their seats becomes very interesting. Thanks for watching.